This is the AI News Flash for May 19th, 1 p.m. UTC. First up, Dell Technologies and NVIDIA have officially launched on-premises agentic AI tools for enterprises. According to Quartz, the solutions run on the Dell AI Factory with NVIDIA platform, integrating NVIDIA's enterprise AI factory software and AI blueprints. The key feature is that AI agents can be deployed while keeping data on premises. This avoids cloud dependence and directly addresses data sovereignty and compliance requirements in regulated sectors like finance, healthcare, and government. With hyperscalers planning over $725 billion in capital expenditure in 2026, a new battleground for enterprise on-premises AI is opening. Alongside SAP's Reltio acquisition and Microsoft's sovereign cloud strategy, this represents a significant signal for enterprise AI sovereignty. Second story. FANUC has announced a strategic partnership with Google to accelerate physical AI. According to PR Newswire, FANUC, the world's largest industrial robotics manufacturer based in Japan, will jointly develop next-generation systems integrating Google Cloud and Gemini Robotics Foundation models to control factory robots with advanced AI. Against the U.S. camp of Tesla Optimus, Figure AI, and NVIDIA GR0D, China dominates 90% of the global humanoid robot market with 140 companies and over 330 models. Google's aggressive investment, following last week's Agile Robots partnership, is accelerating physical AI ecosystem building. This symbolizes the shift of hyperscaler capital expenditure from software AI toward physical AI, marking a turning point where institutional investors are starting to seriously focus on physical AI-related stocks. Third story, JPMorgan's Brunner says AI is moving from hype to real execution. Bloomberg reports that the senior JPMorgan Chase executive believes AI investment has moved past the initial expectation-driven phase and has entered a genuine implementation phase, delivering tangible business results and revenue contribution. JPMorgan itself has over 200,000 employees using LLMs daily, with more than 450 AI use cases in production. Alongside Citi's Gemini integration, Goldman's Claude Core system deployment, and HSBC's 20,000 job cuts, this signals Wall Street's full transformation into AI-native operations. Amid Michael Burry's AI bubble warnings, Norway's sovereign wealth fund estimating 35% loss risk, and Bridgewater's most dangerous phase warning, this bullish signal from a megabank executive is drawing strong market attention as institutional caution intensifies. Fourth story, 3 copyright rulings in the US and an EU deadline have rewritten the rules for AI images. As Fredericksburg.com reports in detail, 3 major federal court rulings in the US, combined with the EU AI Act transparency requirements coming into force, are decisively redefining fair use interpretation and the legal boundaries of training data usage for AI image generation. Following NYT v. OpenAI, Britannica's lawsuit against OpenAI, and the 9 Chicago class action suits, the regulatory framework specific to image generation is solidifying. This aligns with Disney and Paramount's injunctions against ByteDance CDance 2.0 and the Suno Udio copyright lawsuits. Combined with the EU's mandatory digital watermarking and complete ban on non-consensual sexual deepfakes, this symbolizes a decisive moment in global AI governance framework formation. It represents a regulatory signal with long-term impact on AI training data acquisition costs. Fifth story, a Fortune feature warns that Gen Z workers are over-relying on AI at work, and it could cost them their careers. While Gen Z employees actively use AI tools like ChatGPT, Claude, Gemini, and Copilot daily to boost productivity, structural problems are emerging. Lack of fundamental skill development, declining critical thinking, and lost opportunities to accumulate tacit knowledge. Harvard's research on generative AI adoption shows polarization with sharp junior-level cuts and stable senior retention. Stanford's research showing 16% higher layoff risk for young workers in high AI exposure fields, and IBM's tripling of new graduate hiring signal a fundamental shift in the AI-era labor market. With AI-related layoffs exceeding 156,000 cumulative, surveys also show 60% of Gen Z now prefer skilled trades. Balancing AI dependence with career formation has become the most critical talent development challenge of the enterprise AI era, marking a decisive issue in corporate management for 2026. That's all for this AI News Flash.